Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about HubSpot. So HubSpot is a CRM platform and it's predominantly aimed at smaller businesses compared to Salesforce, which is more of a global, large enterprise company. HubSpot's seen its stock sell off approximately 50% in the last 2 months, and investors are now asked to pay 13 times forward sales for the business. Given that the business is highly free cash flow generative, I think it is quite attractive. That being said, stocks don't trade in a vacuum, so compared to the rest of the market, I think that this is kind of like still at the punchy side. It doesn't strike me as being particularly cheap. But yeah, let's just kind of get into this. So, the stock is down significantly in the last several months. This is kind of what's been happening a lot in tech right now. There's a question mark in my mind whether after this correction that we've seen now, things kind of start to stabilize. Of course, we're going into Q4 earnings season, and the large caps are going to be reporting this week, so it's going to be interesting to see how this all plays out. But if I was to make a forecast, I think the things are kind of going to be stabilizing from here on out. But I mean, this is kind of quite foolish to make any kind of assumption right now until we kind of get the results coming out. But so HubSpot is about to report their Q4 results next Thursday. And there's really no question that HubSpot is growing quite a rapid rate. Okay, so they're expected to grow at approximately, let's say, mid 40 range into Q4. And if you think about it, yeah, so they're kind of guiding low to allow themselves to easily beat. And also remember the Q4 last year, they were up 35%. So that was quite a tough comp to beat. And if they're actually accelerating against that, of course, that's really, really compelling. Investors are going to give that a lot of credit. So what did they actually do? So as I already alluded to in the introduction, they are predominantly aimed at serving much smaller and medium-sized companies. Okay, so it's really a platform for their customers to attract and connect with their own customers, to drive insights and customer interactions, and to be able to have an overview of how their ability to bring customers on board. So it's really a one-stop shop rather than having their own customer looking for point solutions all over the place. It's really one place where you can get everything that you need under one roof, because ultimately they're serving much smaller businesses, and those businesses won't have the funds or the resources to either build their own fully fledged CRM platform or even to get Salesforce on board. It's just going to be impractical. So that gives them a reasonable amount of an advantage, and you can see here approximately 50% of their business, of their revenues, is coming from overseas. So it's a global platform, it's diversified, so that gives stability to the platform. And so there's a lot here to like about the business. There's really no question. I already touched about this already. So rather than them, they started off just as a suit and giving you kind of like, okay, here's one app for sales, here's one app for marketing. Now it's more, you come in to the platform and it's just a fully fledged solution. So I think that's something that's really attractive as part of their business. And you can see here, so 57% of their customers are taking 2 or more of their hubs. So hubs or products, whatever you want to call them. So it's not just, coming in and just getting one thing out. It really being able to land and expand that customer is really, really important. And, they're going to get rewarded for this as well. As I said already, the one thing you want to look at when you're looking at these kind of application platforms is to see the growth in customers. So the customer growth was up 34% as a Q3, up to 128K. So follow the customer. I've always said that, that's a lot more insightful than trying to figure out where the next quarterly results are going to come. Just follow the customer. If the customer's coming in and embracing the platform, that's something that you're going to give you a lot of conviction during sell-offs like we've just seen right now. Another thing that I find really, when I looked at this, I was like, wow, this is really strong. So they make free cash flow margins of 11%. Now, if you think about it, right? So not only is this flat to the same period a year ago, but despite investing for growth, to be able to be free cash flow generative, I think that that's really important. So HubSpot is priced at approximately 13 times forward sales, okay? So It's not the cheapest thing going around, okay? Even with the markdown of 50% in the stock. On the other side, you can kind of compare with Salesforce. Salesforce is priced at 7 times forward sales. Now, Salesforce obviously has this issue that it's so acquisitive, investors haven't been willing for a long time to give it a premium. So here in the case of HubSpot, they are paying a premium because it's organic growth. On the other side of the equation, you have to think about it, right? So stocks don't really trade in a vacuum. So if you're getting some really compelling names out there, priced at, let's say, 10 times forward sales, or very strong visibility, high growth rates, it's difficult to say, okay, I'm going to pay 13 times for HubSpot. So it's kind of like a middle of the road, really, to think about. Right now, personally, I'm finding much more compelling names, and if you want to find out those names, don't forget to check out our marketplace. It's called Deep Value Returns. Come in, drop in line, we've got a growing investment community, check out my reviews, and yeah, hope to see you next time. Bye bye.